Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up the analysis of the gold market so you can see the performance on Friday. That it's not occasionally we warned you to not consider any new longs before payrolls, not just because of the payrolls, because on Friday morning we had no particular bullish signs. So market dropped right to the confidence, but response that we saw on Friday was not bullish enough. So it was just technical minor retracement without any bullish signs. And that just carried really big risk of the possible downside continuation, which we actually have got recently. So for now, our major concern here is, stands on intraday charts. I do not see yet anything really dangerous because the validation point of this grabber stands really far. But this performance tells us that market could show a bit more extended retracement depending on what we will see in the nearest couple of sessions. When you will look at the hourly and 4-hour time frame charts, you better understand what I'm meaning. On the daily chart, trend stands near turning bearish, but if even we will get the bearish trend, the context remains bullish. Why? Because we have the directional bullish pattern. Grabber is a directional pattern, and according to the Judd-Napoli approach, direction overrules trend. So it means that if even you have the negative MACD with the bullish pattern on the back, you still have the bullish context for trading, although here performance might be a bit more extended to the downside. That is towards what we have. Second issue here on the daily market stands very close to the MACD break-even point, as you can see. That's why on Monday it will be also interesting to see what will happen, whether we will get here the bullish grabber. Now, based on this picture, I would say that chances for that are not really significant because the surprising breakout on the flag suggests that bears have taken the short-term control of the market. And once this has happened, it very rare turns really fast in opposite direction. So probably market will try to really improve, the bears will try to improve the positions and trying to push price line lower. But still, let's see, maybe a situation this time will be different. So the thing that we need from the practical point of view, the thing that we'll need to keep an eye on here on the daily chart is a potential grabber on Monday. So that's what we need on the daily. On the lower time frames, here's what we have: more extended retracement, and market right now stands on the point that might be really important for short-term scenario, because this is the level, we already talked about this previously, this is the level that is actually really critical for short-term bullish tendency. This is the short-term bullish tendency. Once it will be broken, if market will drop it, it will be different type of tendency where we will have to use larger swings. But this current upward action of the high highs and high lows has the vital area around 3280, 3290 area, because this is the trend line, this is confidence support. And normally, if market stands bullish, it should stay above this area. We're testing it and start upward action. So that's what we will be busy with in the nearest two sessions, probably Monday, Tuesday, I suppose it should be enough. The problem here, some tricky moments, that we have the bearish diversions. So you could see the MACD, which means drop below the C point. Whether it will work or not, we will see. Not necessarily it will work, but this pattern exists and I will have to inform you. So now return back to the Friday setup. If you remember, we said that this might be the hand shoulders pattern. 127 hand shoulders, we've got it, it stands in progress, it's already OP completed, 3311. And take a look that this level stands very close to the confluence that we have here, trend line. And this is the first point that we will consider. The The question for Monday is, since market stands in relatively strong support area and potentially bullish grabber might be formed on the daily, that's the first issue that we'll be watching for. If we will see a really bullish response on the market on this area, appearing of some bullish reversal patterns on the hourly chart, maybe on the 30-minute chart, maybe that will be the point where we will try to take the long position, but we need some confirmation. Currently, I'm not ready to do this. If market still fails and keep going lower, next level that also is suitable to us, brings no problem, is the XOP. Yes, it stands $8 below the confidence area around 32.72, but it's still relatively close. So it stands right here, XOP. So it agrees with the confidence, and in general it is suitable to us and really fits well to overall idea of the market response to this level. So I would say that our working area for a couple of days is 32.70, 32.95, and we will see for response of the market in this area based on the targets that we've got. Depending on the results, we will make the next step. If, as I said, we get the good bullish patterns around it, that's great. We will try to go long. If no bullish patterns will be, market will just break it down. It means that we will be watching for the 32.30 first, and then we'll see what will happen. So if the retracement will be more extended. That and towards what we have on the gold. So let's wait for Monday and see what will happen.